Hello and welcome to Gold and Silver Assets. I'm Diora and it's Sunday the 15th of August 2021. The subject of gold and silver manipulation is quite topical at the moment, so I thought we would take a closer look and see if there are any patterns in terms of the way the manipulation is conducted, and if so, can the retailer profit from it? The first thing we have to face up to is that all markets are manipulated. I can't think of any exceptions. If you know of one, then let us know in the comments. Some markets are more manipulated than others. Is there a way of assessing or measuring that? I don't know. It's not something that I've really looked into. Which is the more manipulated, the gold market or the US bond market? Something that people often ignore is that manipulation can occur to the upside. People tend not to complain about that because since most retailers play the long side of the market, upwards manipulation works to their advantage. So most are quiet when it comes to upside manipulation, but are very, very vocal about downside manipulation. Let's now focus on the gold and silver market specifically. This chart looks at the average intraday gold price movements from 2006 to 2012. Those 6 years included a bear and a bull run. Now, we know that gold is traded around the world at different time zones, and so the bottom part of this chart shows the various locations trading at any particular time. Now, what you'll see here, there's a gap here, and that is the 1 hour time period where gold is not traded anywhere in the world. We can see that the two largest drops in price are over here and over here. So you'll notice that they occur about here, it's about 10 a.m. in London time, and here it's about 2:30 p.m. London time, and that's the equivalent of 9:30 a.m. New York time. And so what we can see is basically these big price drops occur about half an hour before the London AM gold fix and the London PM gold fix. The other thing you'll notice is that prices tend to rise after the New York close and before the London open, like this. And you know, this doesn't seem to be something that's just random. This is covering over 1,700 trading days. And this is quite a large drop here, and particularly over here. So I don't think we can say that this is random. It's a similar story for silver. The largest drops in price occur half an hour before the London AM gold fix over here, and about half an hour before the midday silver fix, which is over here. There's also a large drop just before the Globex close over here as well. Now, these patterns have a cumulative effect over time. So on this chart in red is the spot price of gold, and this chart covers from 1970 to 2020. The blue line shows what the price of gold would be if you bought it at the London PM fix, held it overnight and sold it at the London AM fix, and did that every day. Using this strategy, an investment of $35 back in 1970 would now be worth $20,000. Now, of course, having said that, the reality is that there would be transaction fees involved, particularly if you're doing this every single day, and also there's going to be taxes for the retail investor, and so the actual outcome isn't very realistic if you were to actually do this in practice. The black line shows that if you bought gold on the London AM fix and sold it at the London PM fix, then that $35 would now be worth $3. So what we can see is that during the London trading time, prices seem to be suppressed and prices rise when gold is traded by the rest of the world, effectively. And the thing that interests me is that can this over here go to zero? Can it go negative? I don't know. Theoretically, I guess it could, but in practice, I don't know. That'll be an interesting thing to think about there. Let's take a look at silver in the same way. And here they've used the New York open and close for the buy and sell points for silver. You can see here that the Eastern price ends up at around $220, whereas the New York price is 22 cents. That's a major suppression there. How much lower can that go? We've looked at intraday changes for gold and silver prices, which could come in handy for day traders, but what about intra-week changes? On this chart, the black bar shows the annualized return for gold, which is, this is from 2000 to 2017. And again, that includes both the bull and bear markets. And overall, that comes to around 9% a year. The blue bars show the annualized performance of gold on individual days during COMEX trading hours. So, for example, if you bought gold at the COMEX close on Thursday and then sold gold at the close on Friday, and you did that every single Friday for 17 years, then the return would be the Friday bar shown here, which is about 7%-ish. So according to this chart, gold performs best on Fridays and its worst performance is on Tuesdays. This chart shows the cumulative performance of gold by days of the week compared to the overall spot price. So this line here shows the gold spot price. The blue line here shows the performance if you only kind of bought and sold on the Fridays. And the other days of the week are shown down here. So it's just another way of looking at that previous bar chart. But this is really kind of the cumulative performance. Now, this is quite interesting because although you have an obvious difference in price moves between different days of the week, on a cumulative basis in the long term, you're actually better off just buying and holding gold rather than going backwards and forwards transacting on a Friday. Let's look at similar charts for silver. So the overall annualized performance for silver was actually, interestingly, slightly lower than gold at 7%. The worst performing day was again Tuesday, but the performance was much worse than gold. And the best performing day was again a Friday. And again, you've got similar kind of performance for Fridays for gold and for silver there. On a cumulative basis, you would have been marginally better off with the Friday trading strategy compared to buying and holding silver, according to this chart. So the grey line here shows the spot silver price here, whereas the Friday price is shown here. It's slightly higher, but not a huge amount. And of course, you know, if you include the transaction fees and taxes, then that marginal benefit no doubt will be well wiped out there. And finally, we come to intra-year changes. Gold and silver are certainly known to exhibit seasonality, and according to this chart, the best months to buy gold are March and July. And if you want more detail about gold and silver seasonality, go and see my previous video on that. Now, I thought I thought, well, wouldn't it be interesting if we can get that cumulative chart like we had in the, intraday and intra-week charts there, and to show us what the trading performance by particular month versus spot price would be. I thought that would be quite interesting, but I couldn't find such a chart. Anyway, in conclusion, unfortunately, manipulation is a fact of life and it does exist. And it exists not just in gold and silver, it's throughout the markets. And it exists in varying extents as well, varying magnitudes. Here we've shown clear patterns in the way precious metals move on both the intraday, daily, and even the monthly timescales. And these don't appear to be random. Now, knowing these patterns, there are multiple ways in which you can try and take advantage of this to your benefit. But also remember, the manipulation of precious metals is predominantly occurring through the paper markets. If a big chunk of investors decided to only buy physical silver or gold and completely avoided all paper forms of precious metals, then that would have a significant effect on the pricing mechanism of precious metals. Next up, the market update. Ooh, we had all kinds of thrills and spills last week, didn't we? It was an interesting round trip, shall we say. Let's start looking at silver in US dollars, and this is actually on the 5-minute scale. And when I left you last week, we were over here, and price started drifting down when it was Monday in New Zealand time. And then, interestingly, I was able to watch this price action as it was happening. And we saw this massive smash down here. And it was interesting because I was looking on the TradingView platform. And as this was going on, especially this bit here and this bit here, the screen was actually shuddering because of the frequency of the price changes. It was really fascinating to watch. It was almost like watching an earthquake going on. Anyway, the interesting thing is that notice that all of this price action happened over 3 price bars. So that means 15 minutes. And we got this very, very long lower wick and then price recovered. And I think right now it's about 50 cents below where I left you a week ago. So yeah, that was all very, very rapid. And well done to those of you who picked that as a price target around 22. When people were talking about lower prices in 22, I was kind of thinking, oh, that would mean price would go down in kind of stepwise manner, really. I wasn't thinking of a kind of flash crash like this, but hey, it happened. But in some ways it's a good thing, and you'll see what I mean a little bit later. The other thing to remember with this is that if you're looking at purchasing physical silver, then this actually wouldn't have helped you a huge amount, because the chances of actually phoning your broker and getting the deal done at this price is pretty minuscule, just because of the time it takes to organise all that. And of course, remember that this price bounced back very, very rapidly. So if you're buying physical, that actually wouldn't have, you wouldn't have got it at that price anyway. Of course, it's a different matter if you're trading paper, because of course, that would have been electronically set and things happen very quickly electronically. But yeah, I thought that was just an interesting kind of observation there. Think about what you're doing. And, if you're looking at price targets, think, will I get the physical at that price? Okay, let's move on. And we'll actually zoom out and look at silver again in US dollars, but this time on the weekly scale. And so this is last week's action. And what I like about it is that we do have this long lower wick and we didn't break these two lows. So that's a positive. Can we go lower? Yes, I'll talk about that on the next chart to look at, potential targets. But what we want to see next week, for those of you who are bullish, what we want to see is a green candle next week, even if it's just a little green one, that size even, because what you want to do, when you get a long lower wick like that, you want to see follow through, and basically you want to see price move in this direction, even if it's by a small amount. Now, what can happen sometimes, if you see a red candle like this, then I'll be thinking we're going to come back and at the very least retest this, if not go lower. So that's something to watch out for. The other thing that I thought was interesting was looking at volume. Now, if you look at this red candle here, that was quite a big sell-off there. And yeah, we got a long lower wick there, but look at the volumes here. That was well above the average volume. So this is a 20-week moving average volume, I think. So, I mean, just naked eye, you can see that's a huge amount of volume for that red candle there. The other big sell-off we had was here, and that was the Wall Street silver squeeze candle there, I'll call it that. Anyway, and again, quite a big volume there again. But interestingly, I would say this was a substantial sell-off, in percentage terms, that was quite large. But look at the volume. It's only just kind of making the average there. And the other thing to note is throughout this whole drop that we saw here, volume was dropping as well. So does that mean anything? Look, a lot of these things are very, very woolly. I don't think there's any perfect indicator, but I don't know. To me, those things are still positive. Let's look on the monthly scale and explain why I'm still positive. So remember that I actually tend to look at things on a longer term basis. I don't trade in and out of things, and I know that a couple of viewers have asked, could I give midweek updates and so on? Look, I could, but I don't think it would be of much value because look, I'm not great at these short term price moves, and I just think it will just be a distraction that won't be that helpful. I mean, even doing this on a weekly basis is probably pushing it. But yeah, look, if we look on the monthly scale, and this is why I say I'm still bullish, because I think this is a bottoming pattern. This is an accumulation phase. And I don't think we're going to see prices go below this red line. I'm very doubtful of that. So at the moment, the reason that we've been stuck here is because of all of this price action here. This is proven to be pretty solid resistance here. And especially this $26 to $28 range has been problematic to kind of stay above there. And between there and here, there's not a huge amount of support. At the moment, what's supporting price action is what we're seeing over here. And the question is, how strong is that action? And we've also got a little bit over here as well. So I think that could be reasonable support there. And the fact that we haven't made a lower low, again, makes me still feel positive. What is the downside if we do go lower? I think we're looking at about 18 over here, max. And so this goes back to our asymmetry kind of discussion that we had. So according to this, I think we've got this whole area here provides a ton of support. So going below 18, the chances are pretty tiny, I'd say. Not impossible, but pretty tiny. So what's your downside? Well, we'll go from 24 to about 18, but your upside is absolutely massive up here. So there's some asymmetry for you there. Okay, next we'll look at gold in US dollars on the weekly. And interestingly, price is actually higher than it was when I last spoke to you last week. And yeah, we had a bit of a round trip. So price plummeted to just below 17 and then came right back up. It's interesting how it came back up to this trend line that has been long standing. Now I have drawn an extra trend line to join this low and this low. And so, you know, that will be the next kind of support area potentially if we do go lower. As with silver, we didn't make a lower low. I mean, it came pretty close, but this is actually higher than these two here. And we've got a long wick here. So again, similar to silver, we want to see some follow through to the upside. So we want to see a green candle. It doesn't have to be massive, but yeah, a green candle will increase our confidence of things moving upwards here. If we drop again below this level here, I don't know where that is on this chart here, but you can just join those two lows and you'll find it. If we go below here, then the potential is to drop to around 1620-ish. That'll be our next level of support. I'm still thinking that things are going to go to the upside. The question is though, are we going to be kind of stuck in this sideways area here like this? So one potential, because of course we've got a kind of line that we can draw down here. So one potential is that we can still get stuck over here and then come back down again and then come back up. But then at that point, you know, we could be going up quite substantially. Or, I mean, we could actually just go straight up through there. That's probably a bit optimistic, but, you know, all these things are possible here. So that's the kind of upside scenario. The downside scenario is watch out below and a big drop down there. Do I know what's going to happen? No, I have no clue. Let's let the market tell us. So what we're looking for here is a green weekly candle next week. Next, I thought we'd look at the dollar because maybe that will help us in terms of gold and silver. And this red line is the line I don't think we're going to go above. That's on the monthly scale, that's a long-term area of resistance here. And I've drawn this channel by joining these two lows and this high, and we haven't touched that a second time. I don't know whether we will or not, and that's the big question here. But we do have this confluence over here of those two resistance lines. So the potential is still to go up. We're looking at about 93.5-ish to go up there if we do. So yeah, if that happens, then yeah, we could get another dip down in gold and silver. So we just got to watch out for that and see how the precious metals respond to the dollar move there. But I think that's probably as high as the dollar could go, in which case we could get a turnaround at that point. Now, one thing that I keep meaning to do each week, but I kept forgetting the last couple of weeks, is to have a look at the premiums for the physical. And interestingly, the premiums for gold have dropped quite substantially. They've halved. And so now it's around 7%. Now that's still higher than kind of the long-term average, which tends to be more closer to 5%. But yeah, this has been dropping. Does anyone know why? And the same, well, silver actually hasn't dropped as much. I mean, yeah, it got as high as 60% and then it kind of leveled off at around 40-ish%. But again, at the same time that gold premiums were dropping off, so has silver premiums. We've got a bit of a spike up there and back down again. So at the moment we're at about 30%. But again, the longer term average is closer to 10-12%. And so we're still way above the longer term average there in terms of premiums. The miners. Okay, so I didn't get things completely wrong last week. So the miners, remember I was talking about this broadening kind of formation. So this is the GDX on the daily scale here. And so I was saying that I think we could come down to here and then bounce off of there. We kind of just dipped below that before coming back up. And interestingly, we dipped below it twice here. And this one here, I think, is marginally higher than this one here. I'll have to double check that, but it kind of looks like a double bottom, and we've kind of broken out above here. So are we going to continue upwards? We've certainly got a lot of gaps above to fill, and that's quite a substantial size gap here, here, and here, which have been unfilled yet. With these broadening formations, after the third touch, you'd expect this to kind of move upwards and come up to here at least. Now, the question is this a bottoming formation? For me, I mean, when you get prices getting higher and lower like this, that kind of suggests indecision. And from my understanding, broadening formations tend to be reversal patterns. And so if you've got if it's prices coming down into the pattern, then you could expect a reversal upwards. And whereas if you saw price moving up into the pattern and you get this, then potentially you can get a reversal to the downside. But in terms of this being a continuation pattern, yeah, I mean, it's possible, but how often does that happen? How often do you see that as a continuation pattern? I don't know the statistics on that. Does anyone know anything about that aspect of things? Yeah, I'm not sure. Okay, so yeah, let's see. Again, that's going to be reliant on what happens to gold and silver. The thing I found interesting was that it didn't react particularly badly to the smash in the gold price, you know. You'd expect this to have gone down a lot more than it did, really. And so again, that's positive. It outperformed gold. And that's even more the case with silver. So this is a Silver Juniors SILJ on the daily scale. And this is what price did on the 9th, and that was the 10th of August, which coincides with that kind of price smash. It's kind of tricky because, of course, that price smash happened during the Asian trading hours. And, of course, this SILJ trades in the US trading hours. And so by then, of course, the silver prices had recovered. And so whether that's the reason why it didn't get smashed down, but still, even so, I would have expected this to go well below here, down towards the 12 level, and it didn't. And actually, we formed a higher low again, like we saw in the other metals. And so, again, the question is, are we going to go up here? We've got a big gap over here. Yeah, it's difficult to know, but I'm still positive on this. We've got this long-term consolidation here. So unless this represents a trend change and that the consolidation ended here, that's a possibility. Look, actually working out where these reversal points occur is notoriously difficult, you know. I mean, one good thing that you can say is not to even try and pick those reversal areas and just look for, you know, what the current trend is. So over this time scale, the current trend is downwards. And so unless we get a high above this, we have to assume that that's going to continue. But having said that, if you looked on the weekly scale, then price isn't trending, it's actually still sideways. This is actually higher than the price last year. And so, yeah, it's a tricky one. You've got to decide what timescale you're working on and basically just go with the trend. I think, I'm giving it a stab at where the reversals are, but as you've seen, it's not an easy thing to do. Now we had a few viewers who actually picked the drop in gold. I know we had someone who said, "Oh, price is going to drop to 1,700 before shooting up," and so I said, "Oh, I'm not sure. I didn't think that would happen, but obviously I was wrong there." But look, it was quick, sharp, and fast. But well done to those who picked that. That's good. And if you can show your kind of workings, as it were, what made you come to that conclusion, then do let us know, because I'm learning here as well. Okay, and today is the 50th anniversary of coming off the gold standard. 50 years of fiat. But it's interesting, 50 years is the golden anniversary. Does that mean anything? Are we entering the golden era? Who knows? Who knows? But yeah, this seems pretty long in the tooth for something that was supposed to be temporary, isn't it? Interesting, interesting. Okay, and finally, now speaking of anniversaries, in a month's time, it will have been 2 years of me doing these videos, and I found it very, very educational, and I've covered a lot of topics. Looking back, I've done over 100 videos, and I have to say I'm kind of running low on ideas of topics to cover in the first section of the show. I think I've got about another 3, maybe 4 ideas for topics, but beyond that, I reckon I've pretty much covered this from as many angles as I can think of. If anyone has any more ideas of either extra topics that I can cover, it kind of has to be bite-sized topics, and I like to try and answer a specific question using charts. So that's the angle I'm going for here. So look, if we can't think of any more, I'm not going to kind of keep that first part of the show going, because look, I don't like to talk for the sake of talking. There's not much to say. I don't want to bore everyone either. So let's see. I mean, the other thing is, can anyone think of an alternative format? Certainly I can keep up with the market updates, but I'm kind of running dry on ideas for the rest of the show. Anyway, I'd like to hear your ideas. Let me know in the comments if you've got any thoughts on that. The other possibility is to obviously recap on topics that I've already covered, but again, that's just repetition really. And a lot of them, there's not much that you can update. Anyway, have a think about that. That's all from me for this week. All the best and see you next week. Bye.